SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. So yesterday was a bit of a long video, so I'll try not to do that again today. I know 10 minutes is more than enough. I just need to stop rambling. Right, so let's get started. So we got that pullback. We got a pullback, should I say, and a support on the 21 exponential, sorry, of the 4 hourly. So a decent place to get picked up, but then, oh dear. A contradictory situation now as a rejection from the 10 exponential. So what this is forming effectively is a symmetrical triangle on a 4 hourly, so we can extend that because there's more or less the deal is what's going on right now. You can see, well, what am I doing? That's not a 10 exponential. This is your 10 exponential. So this is the formation effectively that's being formed at the moment. Those two moving averages being pretty relevant, and this is the general direction. So we think about where this is heading from now towards the apex. The absolute apex is what, 16 hours away. The chances are that this is going to break this formation today. A very strong chance of us breaking out of this, and whichever way we break, I would expect to see continuation. Now there is a little bit of a I suppose we'll call it a small safety blanket below this if we were to break down, and that's the 23,300 flat zone. It's also backed up by a 4 hourly Bollinger Band center, so it's not the end of the world if we do break down from this formation and got caught from there. So there is a little bit of margin of error basically. But if we lose that, then we probably do have to then take ourselves to the daily to see the next best place. And it would probably be a little bit deeper. We're talking 22,900, maybe even 22,500. So, you know, like I say, it's short-term time frame stuff. This range should break today. So let's get back to the 4 hourly. Have a little look at the momentum, which is continuing to the downside. There's nothing really turning up on this right now to take it down even further. Considering we're expecting this to break today, we might as well have a look at the momentum on the shortest term time frames. And it does look like it's still continuing to the down. I don't really see any reason to be particularly bullish or look for an amazing bounce on this one. So personally, I do think we come down a little lower. I think that little dip is likely to be at least retested, if not broken, and we come down just a little lower, 23,003 or maybe 22,900. Again, you know, if it does come down further than there, then yeah, we're looking for much deeper, you know, back down to what, maybe even below the into this box where we started from, really, where we picked up from last time on this V-shaped recovery. Who told you that? I told you that, didn't I? I told you about the V-shaped recovery. So thinking about the V-shaped recovery and what it actually is. So we talked about the short-term timeframes there, just based on that 4 hourly, which I still favour a little bit, at least a retest, if not a tiny bit lower. I still think that the overall vibe of this chart is one of up. We're about to turn up on the MACD. We're still playing out this breakout from the RSI. We've got the money flow index snaking up, and they're all in decent places. We're not overheated at all, and that's just on a daily. Obviously, you can extend that to a 3-day. It's going to be even more safe, I'd say, for the most part. And on the weekly, it actually looks very constructive. You know, if we're looking to really turn this up a gear like it did at the beginning of the last bull market, presuming that's what we're in right now, then we've got plenty of room to move. And that's why I was saying these targets of 32 to 38 are on the cards before we see a decent, massive pop, basically, and a giant consolidation. That's based upon its previous price action anyway, of the beginnings, the humble beginnings of the last bull market. We went from, what, 3,300 all the way up to 14,000 in, what, about 4 or 5 months or so? Very quickly, very quickly. That's a big move. Not looking for moves of that size, but we are looking for a 100% move. And if you compare that to, you know, the 250% pump that it did at the beginning of the last bull market, that makes sense. We always recognize that Bitcoin has diminishing returns. That the larger the market cap, the less likely it is to make massive gains, especially when we're dealing with volume like this. You know, 11.2 billion in a 24-hour period. That's not what I was used to when I first was introduced to Bitcoin. It was not doing that. That would be unreal to imagine that kind of trading volume. So yeah, we do look for diminishing returns. So if this is a bull market pump, yeah, 128% from the bottom to the top, that's fine. It's kind of small, really, but it is Bitcoin, and it is trading very differently to how it's ever done. So that's Bitcoin for you. So you can leave the video now if you want. That's fine. But if you do leave the video now, could you just leave a little like and maybe a comment? Today's comment, let us know what your guilty pleasure music is. So what mine is, you probably don't know this if you're American or outside the UK, Busted. I've always liked Busted. I don't know what it is. I like them. So let me know what your guilty pleasure is. Anyway, and yeah, like, comment, and subscribe. That's what you're supposed to say. Right, so let's have a quick look at the traditional markets now, because this was no isolated event for Bitcoin. Everything did it. It all came down a little bit yesterday. The euro still down a little bit today and continuing down. This is the daily. We can see we're below the 50 exponential now, so we might make our way all the way down to that 105.2 where we were hoping to see when we called the top on this. Let's be real. I called the top about 3 times on this, but I did say that there's a very good chance that we do come down to this 200 exponential at some point as a golden cross retest. And when we do come down to there, this is where we get very serious about buying the dip on everything. You know, we did the everything bounce part 1, everything bounce part 2, and then effectively tried to call the bottom on the S&P and the beginning of this large run. Did all of that. It's all there for you to see. This could be, I'll call this one the Everything Bounce Part 4, because I didn't christen the Everything Bounce Part 3, although I did say Bitcoin's going to move from the mid-teens to 19,000. So anyway, it's just me reminding you all of the of recent events on this channel. Anyway, so yeah, it looks like we're going to actually make our way down to this level, and this is the most important part of this pullback, really, because this is where we find out if we continue like you would expect to see when you come down to have these golden crosses retested. You would expect to see continuation from there. Face it, we could come down to 103.3, which is the retest of the golden cross from the simple moving averages. I would much prefer the exponentials. As you can see, the exponentials on these higher term timeframes, this purple one being the 50, this green being the 50 exponential. The exponential held it for the most part, but there is confluence between the two. So we'll give them both the benefit of the doubt. I'd like to see a bounce from here. If not, then yeah, we should wait for us to sail all the way down to this level before a potential bounce. If we break down below there, though, we can say hello to parity and below once again, which means dollar rally. But for the moment, you know, this is a setup that we've been waiting patiently for a very long period of time. S&P couldn't handle the pressure yesterday. And what do we see here? I don't know if you can see it. I can see it. It's a symmetrical triangle once again. So similar to the 4 hourly on Bitcoin, this is basically what's going on the S&P on the daily. So we're looking for this range to break. Recognize that we're getting closer to the end of the apex, so whichever direction it goes could result in a fake out. So if we break down from here, we might not form a downtrend. We might come down to what, 4,000 flat. That would be pretty much good for me, because that would be retesting a golden cross, which is basically confirming today. At the moment, this is a decent area of support. We've got the bottom of the trend line. We've got the 200. We've got the 20 and the 21 exponential, all sitting around this level currently, which is about 4,085. So yeah, this is an okay place to try a position from in the event that we just bounce here from here to the top of the triangle. Pretty crap move, I have to say, but if we did do it, it's still some money, I suppose. And if we broke out from here, yeah, we might result in a continuation of a breakout, which with a measured move that you could probably stick in here to a new local high. So let's say we broke out, you know, between today and tomorrow, we'll be looking for the new high, and that actually marks this level here, doesn't it? 4,300, where we're actually looking for a major rejection to take place. So that all marries up quite nicely. Again, we're at support. It's not amazing, but it is a setup all the same. So this might give us an alleviating bounce from here. If not, down here, 4,000, give or take a few pennies, basically. Now, gold is something that I'm quite interested in as well, forming a more or less the same setup as the S&P, just a little bit further ahead. This worked out very nicely for those who follow me on the Patreon. Feel free to join. We look at gold occasionally. I remember looking down here, so this is a buy zone. You know, this zone is a buy zone. We came down 3 times, triple bottom on this one, and then rallied all the way up to a significant rally, to be fair. Now, what do we see? A pullback. Where are we pulling back to? A golden cross retest. Okay, what else is here? A horizontal of significance. Nicely fitting around $1,800. So I like this setup also. Again, it's one of those trades where you don't need to hang around for too long to know if you're wrong. You can set up a trade Futures, obviously, when we're talking precious metals, it's unless you're going to go to the jewelers and pick it up and then go take it back in a couple of months, you know, it is a futures trade. So you do have to think about stop losses very, very, with extreme scrutiny. But this is one of those setups which could have a decent move. This could be a V-shaped recovery on gold, because this is what you look for. You wait patiently, go and cross, great, continuation, excellent. Okay, pullback, where are we going down to? The bottom level. If it breaks down from here, it's over. If it bounces from here, good chance of V-shaped recovery, excellent setup for a trade. What else are we going to look at today? Oh yeah, of course, the Dixie. And what's the Dixie doing? Same as we've been saying the whole time, the inverse of the euro, coming to do a retest of a death cross, a bearish retest. So that means that we're likely to see, or hoping to see really, a rejection around this area, 104.7, maybe a little higher. Again, the Dixie is not an amazingly accurate chart. It's a barometer of dollar strength weakness, with a whole bunch of other currencies mixed into this soup. So it makes the support to resistances a bit more of a guide than, you know, to the tick like we see in something like the euro or heavily traded charts. But it is a guide. And again, it's doing the inverse of the euro, which is why we always look at the euro. The euro is a better way to work it out for the most part, because it's the one that moves the Dixie for the most part. But again, yen is likely to cause a problem soon. And we'll start looking at that again, because that's how we called the top on the Dixie, by the way, if anyone remembers that. Again, another absolute epic call against everybody on here. Captain Noobmaster hated it when I was telling him about the Dixie. Anyway, I feel like I'm rambling. Let's leave Noobmaster out of this. And so yeah, overall, if you didn't get it, I'm looking for a little bit further in this current trend for Dixie. Same with S&P, same with Euro, same with gold, same with Bitcoin, and then a bounce. And if we don't bounce from this level, then yeah, we have continuation and we might have a problem on our hands. So it's more or less it. And I would expect to see this situation resolve itself today, to be honest with you, today. For Bitcoin at least anyway, and for the rest of the markets, because there's only a little bit further to go in the direction that they're continuing to go in from yesterday. So there's really not much further to go. So we'll sit back, watch and wait, see if our orders get filled, see if our stop losses get triggered, and then yeah, we'll have to just reassess the situation over the weekend. I'm not a big fan of weekend trading, nor do I have the capacity to do it with the kids. But I'll certainly monitor the situation over the weekend. Looking forward to Monday's open. Anyway, thank you for watching. Hope you have a nice day. Feel free, like I say, to leave those comments and subscribing and liking and all the other jazz. Maybe leave 2 comments. Let's see if the algorithm likes that. I don't know. I don't really know much about algorithms, but the more the merrier. Can't go wrong. Take it easy, guys.